Welcome back to Smart Stock Sam, the channel where we turn confusing charts and buried filings into trades you can actually execute. If you were with us a few days ago, you already know exactly which stock I'm talking about, Rezolve AI, ticker RZLV. We mapped out the exact entry zone, the exact stop loss, and the exact breakout targets before this move even started, and as of this week, the stock has done precisely what we said it would do. So today isn't just another recap. This is the follow-up you've been waiting for. Rezolve AI is rallying exactly as predicted, and now the only question that actually matters is how do we trade it from here? In the next few minutes, we're walking through the single-day gain that shocked the market, the $300 million mandate quietly rewriting this stock's future, the hidden institutional and insider buying nobody's talking about, and the exact options trap sitting just overhead that could turn this rally into something far bigger. We'll also lay out the precise trade blueprint for the days ahead, complete with entry zones, stop losses, and profit targets. But first, let's rewind and look at exactly how explosive this move actually was. Yesterday, on June 30th, Rezolve AI exploded for a massive 21.15% single-day gain, closing at $3.15 on extraordinary volume of more than 51.4 million shares. This wasn't some random meme stock spike fueled by internet hype. This move was driven by a landmark $300 million share repurchase mandate that shareholders overwhelmingly approved, layered on top of projections calling for 7.5 times year-over-year revenue growth. And here's the part that should genuinely stop you in your tracks. Despite all of that corporate firepower, short sellers are still stubbornly crowding into this trade. Short interest currently sits at a massive 22.41% of the float, which works out to roughly 51.9 million shares sold short. Those short sellers are now trapped, paying an almost unbelievable 194.31% borrow fee just to keep holding their positions open. Ask yourself this: how long can anyone rationally stay short a stock while bleeding out at a borrow fee that extreme? Because every single day that passes, that bet gets more expensive and more painful. Now, if you've been following Smart Stock Sam for a while, you already know we don't chase hype after the fact. We try to identify structural setups before the crowd catches on. Back in late June, we flagged a $200 million S3 shelf registration that created a 37 million share overhang, a liquidity trap that was quietly emboldening aggressive short sellers to pile in. We mapped out a hyper-specific entry zone between $2.40 and $2.42, with a strict stop loss placed below $2.35. And then the market did something rare. It played our blueprint out almost to perfection. On Monday, June 29th, the stock opened at $2.58, comfortably protecting our stop loss. By Tuesday, it had completely shattered our $2.72 home run target, tagging an intraday high of $3.35. What are the odds that a setup called out days in advance plays out this cleanly? Slim, honestly. But it happened. And that's exactly why we need to keep paying close attention to what this stock does next. For months, the bearish case on this stock has been dominated by a short seller report from Fuzzy Panda Research, which alleged that Rezolve was little more than a repackaged chatbot faking its growth numbers. That narrative created real, sustained downward pressure on the share price. But here's the question nobody wants to ask out loud. What happens to a bear thesis when the actual fundamentals directly contradict it? Because the fundamental reality tells a completely different story. Rezolve AI has secured Tier 1 enterprise partnerships with global heavyweights, including Microsoft, Google, and Tata Consultancy Services. Those aren't the kind of partners that attach their name to a company with nothing real behind it. Even more damaging to the short thesis, Rezolve reported preliminary, unaudited first quarter 2026 revenue of approximately $60 million. To put that in perspective, they surpassed their entire audited fiscal 2025 revenue of $46.8 million in just 90 days. When a company outgrows an entire year of revenue in a single quarter, is that really the profile of a company faking its numbers, or is it the profile of a company the market simply hasn't caught up to yet? Let's put those revenue numbers into real perspective, because the growth curve here is almost hard to believe. Management hasn't just confirmed that massive first quarter beat, they've firmly reaffirmed their aggressive fiscal 2026 revenue guidance of $360 million. That represents roughly 7.5 times year-over-year growth. On top of that, they expect to exit 2026 with at least $500 million in annual recurring revenue, or ARR. For software and AI companies, ARR is the golden metric because it means the revenue is sticky, compounding, and predictable, not just a one-time spike. What does it tell you when management keeps reaffirming, rather than quietly walking back, numbers this aggressive? It tells you they're structurally validating a transition from speculative startup to legitimate enterprise AI powerhouse, right in front of everyone's eyes. While those growth numbers look incredible on paper, none of it matters much if the company's equity keeps getting diluted into oblivion. That's where the ultimate wild card comes in. On June 30th, shareholders delivered a crushing blow to the short sellers by overwhelmingly approving a capital reduction to authorize a $300 million share repurchase mandate. This buyback will be executed through BTIG, and it acts as a direct, aggressive countermeasure against the S3 resale dilution that had previously been suffocating the stock. Here's the critical part of the timeline. This mandate is subject to UK court approval, which is expected by mid-September 2026. That creates something close to an inescapable time lock for short sellers. So ask yourself, would you want to be short a stock bleeding 194% in borrow fees every single day, while fully aware that a $300 million buyer is preparing to step directly into the open market against you? Every single day that clock ticks forward, the pressure on the short side keeps compounding. But you don't authorize a buyback of this size purely on past revenue. You do it because of what's being built behind the scenes. Rezolve isn't simply selling software. They're constructing an inescapable digital moat around their entire business. They recently completed a $230 million cash acquisition of Reward Loyalty UK, which allows them to embed their AI directly into regulated banking environments, currently powering the Visa and Mashreq Bank everyday cashback program across the UAE. On top of that, their blockchain data layer, SQD, also known as Subsquid, just reported that data volumes surged fivefold to 1.4 petabytes daily, now supporting more than $20 billion in assets under management. This isn't a fragile, single-product company. This is a robust, diversified ecosystem that's deeply embedded inside enterprise infrastructure. And when an ecosystem expands this aggressively, there's one obvious question left to ask: who's actually buying into this stock right now? The smart money answer here is genuinely striking. Institutional heavyweights are anchoring this stock, led by BlackRock, which holds close to 11.95 million shares, alongside sizable positions from State Street, UBS Group, and Susquehanna. But if you've followed markets for any length of time, you know the single most bullish signal you can ever find isn't institutional buying, it's insider buying. CEO Daniel M. Wagner has been putting his own capital on the line, recently accumulating more than 812,000 shares, valued at roughly $3.25 million, bringing his total personal stake to approximately 9 million shares. Director Stephen Perry also purchased more than $250,000 worth of stock back in May. Think about that for a second. Why would insiders, the people with the clearest possible view into the company's real pipeline and cash flow, be spending millions of their own dollars right before a $300 million buyback mandate takes effect? So with the smart money clearly loading up, where do the professionals on Wall Street actually value this company? There's a genuinely profound disconnect between where this stock trades today and where Wall Street's own analysts think it belongs. While the stock currently trades around $3.15, The average analyst price target sits at $11, representing extraordinary implied upside. Even the more conservative voices on the street, like Roth Capital, maintain a buy rating with a $9.50 target, specifically citing the company's aggressive 100-person sales hiring push and cross-selling strategy. On the higher end, Alliance Global maintains a target range of $13 to $15, citing Rezolve's substantial first-mover advantage in AI commerce. Do the math on that for a second. That implies a staggering upside potential of roughly 200% to 375% from current levels. What would it actually take for the market to close a gap that wide? A price target, though, is just a destination on a map. To know when to actually get on this train, we need to look at the stock's immediate technical posture. Right now, RZLV's technical posture has shifted definitively into what traders call a strong buy regime. The stock has decisively broken out of its prior structural trap, crossing above every critical moving average, including the 5-day sitting at $3.04, along with the 20-day, 50-day, and 200-day averages. Momentum here is incredibly bullish, with the 14-day RSI sitting at 71.59, the MACD strongly positive at 0.13, and the ADX reading 43.73, confirming a genuinely powerful directional trend. This isn't a shaky, one-day pop. This is a confirmed multi-time frame uptrend backed by massive trading volume. That technical strength is the spark. But there's a hidden metric we need to look at right now that could turn that spark into a full-blown inferno. This is where the math turns genuinely lethal for the bears. We already know short sellers are boxed into a corner, paying 194% borrow fees on nearly 52 million shorted shares. But the options chain is quietly acting as a massive gamma squeeze engine right on top of that. For the upcoming July 17th expiration, there's an enormous, concentrated wall of 11,759 open put contracts sitting exactly at the $4 strike price. Here's the trigger mechanism. If the stock price pushes into the mid-$3 range and approaches $4, options market makers will be forced to aggressively buy the underlying stock just to delta hedge their own exposure. That's algorithmic buying. Not sentiment, not hype, pure mechanical order flow, and it provides literal jet fuel to any rally that gets close enough to that level. What happens to a stock already running on strong fundamentals when a wave of forced mechanical buying gets layered directly on top of it? Now, none of this matters if we ignore the risks, because every single trade setup has a dark side. Let's be strictly objective about the balance sheet here, because hype without risk management is exactly what gets traders wiped out. While Rezolve holds a strong cash position of $111.1 million, the company currently carries a negative working capital position of negative $87.1 million. This company burns cash, which makes its path to positive free cash flow absolutely critical to watch. The market will be paying very close attention to whether that massive $232 million exit 2025 ARR figure actually converts into recognized, audited revenue that supports the $360 million target. And here's the uncomfortable question worth sitting with. If the company can't fund this $300 million buyback entirely from organic cash flow, will they need to seek outside financing? And what would that mean for existing shareholders? Knowing both the risks and the upside clearly, how do we actually trade this setup heading into the coming week? Here's the exact actionable playbook for this shortened holiday trading week. The broader macro backdrop will be dominated by data releases like the JOLTS report and non-farm payrolls. If employment data comes in soft, expectations for Federal Reserve rate cuts will likely rise, and that typically creates a meaningful tailwind for AI and growth equities across the board. For RZLV specifically, we're watching for an intraday consolidation or possibly a slight morning pullback into a target entry zone of $3 to $3.05. That entry aligns closely with both psychological support and the 5-day moving average sitting at $3.04. Could the stock simply gap higher and skip that entry zone entirely? It's possible. And that's exactly why patience and a plan matter more than chasing green candles. Once you're actually in the trade, though, you need an exact roadmap for where to lock in profits and exactly where to cut your losses if the setup fails. You never enter a trade without already knowing your exit on both sides. Immediate strict support sits between $2.90 and $3. Your absolute hard stop, the level where this breakout setup is fully invalidated, is a daily close below the Fibonacci pivot at $2.74. On the upside, target 1 sits at $3.35, an immediate retest of the recent highs. If the stock clears the major barrier at $3.50, we then look toward target 2 at the $3.62 classic R2 pivot. And finally, target 3 is the $4 home run level. Breaching that level is exactly what forces market makers to hedge that massive put wall we talked about earlier, potentially triggering a violent, mechanical, short covering rally. What would it actually mean for this stock and for anyone holding it if that $4 level breaks in the next few sessions? So, after walking through every catalyst, every risk, and every level, what is all of this actually worth? Rezolve AI currently exhibits a genuinely rare structural and mechanical pricing anomaly. The fundamental floor underneath this stock is rapidly rising, backed by 7.5 times projected revenue growth and a $300 million BTIG buyback mandate that will actively neutralize dilution going forward. Sitting right on top of that floor is a mechanical trap, where 22.4% of the float remains short, bleeding out at 194% borrow fees, staring straight down the barrel of a $4 options wall. You have to respect the cash burn risk here. That part is genuinely non-negotiable. But strategic entries near the $3 level appear to offer a highly skewed, calculated risk to reward ratio, with real potential to capitalize on what could become a genuine short and gamma squeeze. Before we wrap up, though, there's something important I need to say clearly. This video is for educational and informational purposes only. Nothing in this breakdown constitutes personalized financial, investment, tax, or legal advice, and Smart Stock Sam is not a licensed financial advisor. Stocks like RZLV are volatile, low-priced, and heavily shorted, which means they can move violently in either direction, including sharply lower without warning. Any price levels, targets, or trade setups mentioned in this video reflect opinions based on publicly available information at the time of recording, not guarantees or promises of future performance. A past setup playing out successfully does not mean a future setup will do the same. Always do your own independent research and consider speaking with a licensed financial professional before making any investment decision. And only ever risk capital you can genuinely afford to lose. With that said, let's wrap things up properly. If you found real value in this breakdown, the single best thing you can do to support this channel is drop a comment below, right now, before you scroll away. Here's my question for you. If RZLV actually tags that $4 level this month and triggers that put wall we just talked about, will you be watching from the sidelines, or will you already be positioned for it? I read every single comment, so tell me exactly where you stand. And if this kind of deep, data-driven breakdown is exactly what you've been looking for, do 3 quick things for me. Hit that like button. It genuinely helps this channel reach more traders who need setups like this one. Subscribe and turn on notifications so you never miss a breakdown the moment a setup like this starts developing. And if this specific video helped you or potentially saved you from a costly mistake, consider sending a super thanks using YouTube's built-in support feature. It goes a long way and directly fuels more research just like this. Finally, if you're serious about leveling up your investing and trading, our channel membership is officially open. Inside, you'll get early access to trade setups before they go public, deeper research breakdowns on custom requests, and a level of support you simply won't find anywhere else on this platform. If you're ready to stop watching setups from the sidelines and start trading them with real conviction, that membership is exactly where you belong. Trade the plan, respect your stops, and I'll see you in the next update.